Hey everyone, Arc Trading here. Welcome back to the channel. Hope everyone had a good week. So just going to go over the setups that I personally took throughout the week and just a couple ideas, examples of what I would have taken, what I would have avoided. Personally, for me, it was a flat week. And just to kind of dive into Monday, I was out of town, so I did not take anything for obvious reasons. But just going to go through some examples. AP actually took this one, which was pretty decent. This was, we were range trading on the 1 minute. You can see we were kind of in this wider range. So after this external liquidity got taken, there was a 1 minute CSS flip right over here. Okay, so close below that, up close with the high. And we did have this 10-second zone over here. So a lot of people say this is a counter trend, but since we are range trading, this was at the top of the top of the range, especially after external liquidity got taken. So 1 minute CSS confirmed, 10-second zone confirmed, close below right over here. So like I said, we don't count the wicks. 50% entry, and then that would have given the 1-to-1. So that was around like 10 o'clock Eastern on Monday, which is nice and quick. And just to kind of go over another example, I didn't see too much on Monday, but just to kind of go over this that I personally liked was we were heading bottom of the range. Okay, we had a fail to close on this 1 minute swing low. So fail to close below it, close back in the range with a 1 minute CSS flip to the upside right over here that closed above. Now, a couple of ways you could go about this is, so we do have this 10-second true zone. So this high was closed above by this low. Okay, so that would be your true zone. Now, with us, typically we like to refine it. Even with this, if you took the true zone 50%, this would have still hit top of the zone, so that would have been a 1-to-1 anyways. However, I would have refined it down to this high over here. It just seemed a little bit cleaner. Move origin would technically be this swing high up here, but sometimes the 10 seconds there could be a little bit of a mix up between move origins. To me, I would say I prefer this as more of a move origin or a refined area, and this would have tagged you in. And depending on break even parameters, me personally, this would have been break even, especially when it comes above, like, I would say more than halfway there, like around 75% of the way there, I will resort to a break even, but this would have still ultimately hit top of that zone, which was around like 10:30 Eastern. So moving on to Tuesday, July 30th, I was back on the charts. Now we did have 10 o'clock Eastern news, which typically I don't like to trade within 5 to 10 minutes of news. I don't want to be in a trade when a red folder news does hit. But I do want to go over this setup. I thought this was really nice, and if it wasn't for news, I would have taken this. Now we are in a bearish trend, so broke out of the range, down into a bearish structure right there. Now looking over this 10-second zone here, we do have a 1 minute CSS right over here. Just to mark this out. So 1 minute CSS right there. We had a fail to close on the 10 seconds. So pushed up above this high, closed back in the range, and then a body closure below this low, which essentially some might argue this is a flip zone or not, but to me this is more of a failed zone. So failed to close above, creating another zone, close below 50% of that zone. That would have been a 1-to-1, but like I said, it was really close to news, so I wasn't comfortable taking it. But moving on to this is something that I did take. This was a break even. Break even did save on this one, which is nice, because if it wasn't for the break even, this would have been a loss. So we had a fail to close on the 1 minute up here. Okay, and overall structure is bearish. So keep in mind I would be focusing more on the shorts there. So fail to close. We had a 1 minute CSS flip right over here. Okay, so close below that, up close, that created a high, created created a true zone down here. So we closed below this low. This was a true zone. I anchored it off this move origin, and the reason being is this move origin right here, so let's call it this zone, is more so closely associated with the CSS. Now, you could still take the true zone, nothing wrong with that. But for me, when I see a completely unmitigated move origin that is closer to the CSS, I will refine it to that. Now, of course, the pros and cons with that is pros being you're going to get a better entry and a better chance of it hitting the zone low of that move origin. But the con of that is if you didn't take a true zone, sometimes the true zone would hit 50% and then come down to zone low, which in that case, I do not take the move origin anymore. So I decided to refine it to that, just was clear in my head. Hit 50%, came down, was close. I think it was about like 2 ticks, or was it a point? It was 1 point away from TP, but I did hit break even, and then just came up, hit my break even. But like I said, that would have been a loss if I did not hit that break even. Which this is a little bit tough because structure is bearish, and we already had a fail to close. Technically, with this fail to close, this low right here on the 1 minute would be the weak low. Okay, so you have the 10-second here on the 1 minute here. Theoretically, this would be the weak low, but it decided to do one more run up, take out that high, then go down to this weak low. So already break even on Tuesday so far. And then there was zones that are marked out, but we just had these shallow mitigations. So like for example here, I was definitely okay with this short. Didn't come up to 50%. Same here, same here. And then I did take this one right here, which was a winner. So kind of the same concept. You had a 1 minute fail to close over here. Okay. 1 minute CSS flip below this up close right here. Okay. And created a really clean zone. Actually, this was even a fail to close on the 10 seconds. So with the fail to closes, it really does, especially if you align it with structure, it really does become an A plus setup when you have not 110 seconds zone. 10 seconds. Fail to close. There we go. So when you have a higher time frame fail to close aligned with higher time frame structure, now higher time frame being the whether it's the 1 minute, sometimes I use the 6 minutes if I don't have a good read on the 1 minute. But if you have a fail to close, CSS, aligned with structure, clean zone, fail to close on the 10-second as well, to me that is an A plus setup. Okay, so hence why I took that. So we really only had the move origin because the move origin zone was what closed below it. This is not the zone because see these candles wick through it, but it did not have a close below it. So we can't, on the lower time frame, less than 10 seconds, that probably was a close. However, with this right here, I would not anchor it off this point, even though it would have worked out because we did not have a close below. So this would be the only zone that made sense. Hit 50% and then went straight to TP within like less than a minute because 10-second chart is going to be a little bit quicker. Okay, so that was green on Tuesday. Now moving on to Wednesday. Wednesday was a red day for me, and I like to keep it one trade a day, whether it's win or lose. If the first trade's a break even, then I will give it a second shot. So Wednesday, clearly bullish uptrend, right, since open. So going to be focused on longs, which I'm not the biggest fan of longs. That's just me. Typically, I do read shorts a little bit better, but doesn't mean I'm not going to take long setups ever. So we had a push into a zone right here, 1 minute zone. 1 minute CSS flip back to the upside, closed above this high. Now a couple things, like I said, you could either go off the true zone. So this is your true zone right here. This is the high that created that low. Close back above it. That is your true zone. Okay. Now refined, what I saw was this move origin right here. Okay. Unmitigated move origin, closed above, barely had any retracement into it, and pushed through. Consolidation as well, which is nice to see. Now with this, came down, hit 50% of move origin, took some heat on it, but it actually hit 50% of this 10-second hit in S&D, which is interesting to see. But that kind of saved this from being an L. Push back up to break even point. I thought honestly with this kind of momentum, I thought this was going to go straight to zone high. Did not, but that's why we do have break even parameters. Hit break even, but that break even would have saved that loss right there. Now moving on to this one right here. This, me personally, looking back at it, I should not have engaged in this, but that's how you learn. Is we did have equal lows right here. So just to kind of talk about this, we had a CSS right here, 1 minute CSS flip right here, right? Clear 10-second zone. Okay, clear 10-second zone, 1 minute CSS flip to the upside right there. Okay, good displacement through consolidation. Now, typically with the AMD, it's going to consolidate, manipulate down, then distribute back up. So, you know, I was correct in the direction. The only thing that was in the back of my mind before taking this trade was we do have equal lows. Not so much on a 10-second, but more so on that 1 minute. So equal lows typically runs the high, right? Equal lows ran the high up here, and then we'll get liquidated. So my fault for putting the stop right where the equal lows are, because that's exactly what happened. And in my head, I'm like, the only thing that could go wrong with this trade is if these equal lows get ran through and it pushes back up, which that's exactly what it did. Took out those equal lows just enough to stop me out by like 2 ticks, and then went straight to zone high. So looking back at it, that isn't something I should have engaged in, but welcome to trading. That's how you learn. Okay, so definitely note it down for the future on this one. And then so once that's a loss, I call it a day right there. So that would have been a flat week already. These are just examples I marked out. Now I do want to go over this example, just as I was talking about, where when you integrate the fail to closes, that's when the probabilities really go up along with structure. So being a bullish structure day, if I didn't take that loss, I would have definitely taken this one. And to me, this was a A+ setup. Is we do have this fail to close on the 1 minute, right? So wicks through, closes back in the range, creates this nice hidden S&D as well, right? So price typically gets attracted to those hidden S&Ds, 50% of it, and then pushes away from it once it taps, right? So at the same time, we did have this 10-second zone. So this low right here that broke that high, which was a swing high, created that zone. But we do have this really obvious move origin right here. Okay. So there's the last move down that created that move up, right? So with the failed close, clean 10-second move origin, this right here, I would take 10 out of 10 times. Hit 50% and went straight to TP right there. And at the same time, it is aligned with structure. Okay, so just to give an example, when you start integrating those fail to closes with that CSS, like just to go over this too, we did have the CSS, 1 minute CSS right there. Okay, close back above it. So that would have been just a quick one-to-one prior to even hitting that 50% hidden S&D, which it did after, and still would have worked to that zone high. So even, for example, this, if you're taking 50% of the zone alone, this would have still worked out in your favor. See, hit 50% of the zone, did not hit zone low, hit zone high. That's for the power of that hidden S&D as well. Now, moving on to Thursday, August 1st. I was actually done in pre-market. Typically, I don't hop on pre-market, but for some reason I was on. We did have 8:30 Eastern news, so like to wait about 10-15 minutes after. And I did end up actually taking this one. So this was, in my eyes, an A+ setup. We had a 6-minute fail to close. Okay, so just create that conviction if we're going to range, keep moving forward, or keep moving upwards or downwards. So once you have that 6-minute fail to close, chances are this low right here is going to be the weak low, right? So fail to close up there. We had a 1-minute fail to close as well. So wick through that high, close back in the range, 1-minute CSS down here too. Created this 10-second zone right over here. Okay. So that high broke that low, created this zone, but what you see here is you have this complete unmitigated move origin. All right, now like I said, you could have taken 50% of this would have worked out of the true zone, but being an unmitigated move origin, I'm okay with playing that zone as well. So being pre-market, obviously the stop's going to be a little bit tighter, so I actually end up going 2 minis on this. being 6.5 points. So hit 50% and just a straight 1-to-1. So that's a win for the day. I was already done pre-market. And good thing I was, because there was one, actually, this was not bad at all. This was just aligned with structure since we were moving lower. 10-second zone, 1 minute CSS flip to the downside. Uh, Honestly, a good close below it, a little bit of consolidation. 50% went down. However, this is 3 minutes till open, so not comfortable taking that if I was not done. Now, going throughout the day, I mean, this was a day where it just kept bleeding. Shallow mitigation. So when you have a trend day, sometimes it's going to work in your favor or not. Work in your favor being if you have deeper retracements, is going to create more opportunities for this model. But when you have these shallow mitigations where it creates these zones and does not come up to even 30% of the zones, it just leaves them behind, it becomes a little bit tougher. There was this one, which, based on my parameters, it would have been a break even, but just to mark it out. So we have, this is actually a 1 minute zone, probably aligned with the 6 minute. I think there was a 6 minute fractal in that too. Uh, Pretty clean. But regardless, it would have been a break even because I think this hit about, yes, about 70% of the way. Usually around that 0.2 or 0.8, let's call it, hits, I will resort to the break even. So that would have been break even anyways. And aside from that, just like I said, shallow mitigations. There was this one right here, which I was not too crazy about. This is just playing structure. No fail to close because this could have easily, if you don't have a fail to close and you have the stronger close above, for example, this high, this could easily retrace up to these unmitigated areas. But when it's heading straight down like this, me personally, I don't like taking the 1 minute flip counter trend, specifically the first one. I've just seen it fail more times than not. So, um, this flip right here, I would not have taken, even though it did work out. Okay. There was a short opportunity there, like I talked about. Move origin, you have a true zone over there. This is if you're just playing straight structure. More times than not, it's going to work. Now moving on to Friday, August 2nd. So kind of gave, after open, gave some time for the market to kind of play out. We did have large red folder news at 8:30 Eastern, which just really freaked me out because we came a tick away from taking those data highs. I know MNQ took the data highs because technically on the data highs, the MNQ price was lower. But that failed to take data highs, which I thought it still was going to push, but kind of just waited for the market to settle a little bit. There was this right here where I was more than okay with taking. Right over here, it came a point with an entry on the short and just melted down. So that was a little bit unfortunate. So with that mindset, we did have this 1 minute CSS here. Okay, 1 minute CSS. Created this really clean 10-second zone, just a single zone. Came close to 50%, went down. So when it comes this close to 50% of it and goes back out of the zone, I will pull my limit off. I won't leave it there. But if it like did the same exact thing, retraced a little bit, then I would still take it. There was this one right here which would have worked. However, I personally did not like this move down. It was just a lack of volume. And usually when these moves happen, you get that V-shaped recovery. So I did not want to be caught in that. Overall, everything else made sense. You had a layered 1 minute CSS actually. So it came up, hit that CSS flip over here, then created another 1 minute CSS right here. So on the outside, everything made sense. Just this move right here kind of spooked me out a little bit, even though it would have worked out. Okay. And then moving on to what we took. I thought this was a plus aside from the fail to close. Just kind of go over it. We had both. So obviously right now it is bearish. Okay, since MNQ took the data highs and NQ didn't. as soon as it closed below this low, I'm like, okay, we're probably going to pivot back down. Uh, Pivot a little bit back down, kind of range a little bit. But we had this 6-minute CSS flip to the downside. Okay. 1-minute CSS flip to the downside as well. And overall structure was bearish. So kind of ignored what was going on around here because my main focus was this move origin over here. Now, some might argue, okay, we took a weekly low down here, but you're always going to have confluences that are going to work with you and confluences that are going to work against you. You're never going to have a trade where every single confluence is going to be with you, okay? Sometimes, even if there's something against you, you still have to pull the trigger if it looks to your standards like an A or A plus setup, okay? Hope that makes sense. But in regards to high time frame, made sense. For me, we had a deeper mitigation before we go lower. If you want to get ICT technical, we do have a breaker over here as well. So deeper mitigation in, and then flip back down. So this is on top of it being a move origin. This was actually a 10-second flip with a bearish structure. So that was what was going through my head. Hit 50%, took heat on it. I thought this move back down was going to probably hit that zone low. Got sucked up real quick and eventually hit that stop right there. Okay, so that put me flat on the week. A couple notes. Obviously, if I was trading Monday, I would have been up about 1.5% for the week. Or, more so the one trade I do regret was the one with those equal lows that I took. But, that's part of trading. That's how you learn, journal, what works, what doesn't work. But this, I would take 9 out of 10 times. Aside from a fail to close, everything made sense, in my opinion, on what I've seen before. Okay. So I hope all that makes sense. So main things I look for, just to kind of give you a short checklist, is number one, structure. If we're ranging bearish, bullish. Number two, a CSS. So preferably a 6-minute with a 1-minute CSS flip towards the overall trend. So for example, if we have bearish structure, CSS flip to the downside, right? And a fail to close. Now, sometimes you're not always going to get the fail to close. At minimum, I will look for a CSS flip. If there's no CSS whatsoever, I will not be taking anything. But if there's a high time frame CSS flip with the fail to close along with structure, that is going to be my A++ setup, okay? I'm going to try to focus a little bit more on those this coming week, but if something like this over here sets up, more than likely I'm still going to be taking it. One thing I did note down for the week is if your stop has equal highs or lows, then I will be avoiding that. I kind of learned my lesson on that one, okay? But if you guys have any questions, just comment down below, like, subscribe, and I will talk to you guys next week. See ya.